What's up, market makers, militia guys? This may be the most important video in the Road to 25K series. A massive Bitcoin move is incoming. It is imminent. I'm going to show you how I know that. Additionally, I'm going to show you how to track the whale manipulation that has been heavily at play in trend, especially since we entered the kill box and just before it. All right, guys, let's get right into this. All right, 1 hour time frame. What am I showing you here? This is the LMF filter. I want to show you a concept. We talked about this yesterday. Price moves in waves, right? Don't worry about the shapes. Look at the wave. Price moves in waves. Why is that important? There's whole trading systems like Elliott wave theory based on this principle. Price moves in waves. There's a way you can track this. What makes the waves? Volatility. What does volatility do? You get to separation in candles. When the candles separate like this, it's in a high volatility environment. You need to track volatility, guys. I'll show you this right now. This is the ATR. We all do this in Forex. This is how we collect pips in our currency pairs. What I do is swing hunt. So you keep a baseline down at a low level in trend. When volatility descends, it always pumps back up. And if volatility descends a lot, goes below my baseline, I know it's going to be a big pump. Now this can be a dump or a pump, okay? Keep that in mind. And what is Bitcoin doing right now? Volatility is descending, so it'll come down, it'll come to this baseline or maybe just before or even below it. It can stay there for a minute, a day, a week, but this is a highly volatile asset. So when it does make a move, it's going to come back up just like it did here, right? Off these pumps that got it up here. That's why you need to track it. So let's look back at Bitcoin real quick. Let's see if we can see where it's hitting its head and what the problems are here. So if we turn off our LMF filter, instantly we need to look for shapes, right? And if you squish this up, you already see the double top, guys. I mean, this is over and over again in Bitcoin, okay? Now, this is relevant because when this massive move comes, we know that high volatility, when that thing spikes up, the price can go up or down. It can pump or dump. So you have to look at the probabilities. What are the probabilities it's going to dump? The price wants to come down. This is why it keeps making bearish shapes in low volume areas, okay? What you had happen here was a reversal. That was a reversal of a double top, and we're going to analyze this and decide whether or not this was a whale move, okay? But you need to understand one simple thing, a takeaway. Every single time frame in Bitcoin is super bearish in pattern trading. You see this? Double top. If this comes down and breaks the neckline, it dumps. Okay, so yes, could the pump go up? Of course it can. But the bias, the market is telling you it should go down. Okay, and you see this even in the daily. The daily has a disjointed double top. Right now, if that magically fell, diagonal, boom, dumping. Okay, if this comes down and prints candles, head and shoulders pattern, dumping. Guys, you need to understand. So what's keeping the price up? Because I saw people's comments who said, dude, you keep calling out patterns, they don't break. I know. I'm going to show you why they don't break, guys. This is really easy to track, okay? We're going to focus on this area right here. Let me erase this so you don't get confused by the noise here. Erase that, erase that, erase that, that, and that. We're going to focus on one area right here. Why is that area important? Let me zoom in so you can see this. This area is important because this was a double top reversal that got us into the kill box, okay? So you need to understand that concept because this is artificial. Bitcoin's being artificially inflated right now. And if you can prove that with volume studies, there's volume studies. You don't need Glassnode. You don't need an $800 a month subscription for this, okay? So you guys see that pump, right? You see the pump. We're going to pull this down. Let's make some room here. Pull this down. There we go. All right. So what do we have here? This is price volume trend. This takes a segmented piece of time, and from that, it does a price/volume calculation that shows you how much volume was needed to move that price up, okay? This is relative volume down here. Again, takes a segmented piece of time and shows you how out of trend that volume was for the trend. This is how you hunt institutional/whale candles. Very simple, right? So let's look at this. Here you go. You have your double top that formed. The market wants to go down. Nobody was buying. And we had this reversal candle. Where did that happen? Right here. You are 2.5 times out of trend for volume, right? And look at the candle that it formed on, guys. It formed on the very first candle in trend. You got the biggest price movement up off the smallest candle in the volume trend. Now, if you guys are using that little indicator in TradingView for volume, that's a volume average. It does not factor in price. So you probably just see a candle like that. You're like, it's a green candle. It's organic. No, it's not. It's highly concentrated wealth. What does that mean? How can you have low volume and have a big price hike? Well, it's simple, guys. You have low volume, big price hike because it's one guy with $100, right? So that's low volume. One guy with $100 versus 100 guys with $1. The 100 guys with $1 came in up here. These bigger volume candles, they came in up here. And where are these at? These are all up here. You see this? And then look what happens to the volume when you factor in price. The volume is descending, okay? Do you understand that concept? The volume is descending, yet look at the price. The price is ascending. That's volume divergence in most volume indicators, but again, we're factoring price here. This indicator is used to show money flow into an asset, and then you marry it to relative volume, and you can see how out of trend you are, and you can match that and decide that is a whale movement, okay? So look at this. By people that do futures like me, you know what that is? That's short hunting. You see that candle way out of trend? And then look at this. Oh, it's magically, it was an institutional candle. Look at that, 2.3 times out of trend. And then look at the candle, the volume candle that did it. That little guy right there made this price hike out of range. Okay, the price hike out of range was an institutional candle on small volume that is to clear shorts, guys. You got to understand the whale games. This is important. Why is it important? Because it shows you that this price hike is artificial. There's no organic structure for growth here. 200K videos will not get it done. The market wants to roll. Okay, the market keeps wanting to roll. Let's do one more because these are fun. Another volume analysis here. Let's look. Let's look at this pump. Gee, was this pump organic? Because that's a big pump, right? Was this pump organic? Well, relative volume says it is 2.2 or 2.3 times out of trend. Look at the volume. There's literally no candle for that price hike. That means that super concentrated wealth drove the price up, okay? Super concentrated wealth drove the price up. The layman, everybody looking at their phone on their Binance app, they come in over here. That's where they come in, right? And then, of course, price just starts rolling, right? It starts rolling, and then I just covered it up. But then, because price is rolling, you make a double top, and then you go down more, okay? Because the market is rolling. The market is at a top of a bear market in the kill box. That concept is why I mark this a kill box. There's no volume here to buy. The only way the whales get this up is a pump. So could that big move be a pump? Absolutely could be a pump, right? They need to pump it to get it up because the market's not buying it. And you can go through this over and over and over again. The market keeps dumping, saying the price is too high. Retail is doing these pumps. You can analyze every single pump. Whales are doing these pumps. You can analyze every single pump. It has a low volume candle, way out of trend, okay? Concentrated wealth is pumping up the price of Bitcoin. So it doesn't matter. Now, having said that, they can clearly pump it, guys. That's what I keep telling you. Above 48K, there's more volume. Doesn't mean there's less manipulation. There's no reason they couldn't just pump it to 50, 52, and then you start rolling over, market's not buying, and then it comes back up, market's not buying. Boom, what did you just do? You just made a double top and you dump. That would be a massive bull trap. You're in a massive bull trap right now. That's why you're printing bearish patterns on every single time frame. Understand that concept because YouTube does not understand that concept. You only have bearish patterns because all of trading is volume, buying and selling, and nobody's buying. The way they keep reversing these is to pump it up artificially. Will they keep doing it? They absolutely could. What's the bias for the price? The bias for the price is to dump and dump hard and find a level where people will buy because nobody's buying here. That's why it keeps rolling over in trend over and over and over again. This whole pump is artificial, guys. Understand that. So yes, you could wake up tomorrow and Bitcoin's 52K. That's the institutions pumping up the price. The bias is to drop, and at some point it will drop. And you hear people say terms like bear trap. Bear trap does not exist. Let me explain why for people who don't trade futures. Bear trap refers to people shorting the market. There's people who short the market like I did all through June and July. You use a stop loss. You use a 5%, a 3%, a 10% stop loss. Worst case scenario, you lose a few percent of your money. The people that get wrecked are people that get wrecked in bull traps, guys, because they're holders and they buy here because they're watching videos, they're hearing people, they're seeing news press releases come out saying 200K Bitcoin. Some guy that founded some coin says Bitcoin 150K by the end of the year, so they buy here, wanting to hold for long-term wealth. And if the market completes one of these patterns, if we get a pattern completion on a double top or head and shoulders, you're going to lose a lot of money and you're going to be negative like 30% like everybody is who held before May 12th. Guys in our group, personal friends of mine, everybody is negative that held coins waiting for 200K Bitcoin. Don't be a holder here, okay? You can trade in futures or just wait. Wait and see what candles do up here. I cannot give you a prediction because there's no candles, but this is a huge bull trap right now, printing very, very bearish patterns. Guys, protect your wealth. You work hard for it. Come join our Discord. Get my TA, get Elliott Wave, get everything. Our admin team does it all, guys. Love to have you there. Have a free site as well. I will post some training videos on these indicators so you can learn how to use them. Guys, take care. Be well. Happy Wednesday.